Helpful above. In today's session, we are seeing that yesterday's risk of sentiments are still prevalent, and more or less, we can say that looking at most of the financial instrument, the risk aversion has taken hold, and I think it will be a while before we see any bullish momentum creeping in. And considering the prevalent economic data and market commentary, I think it will be better for us to adapt the sale on rise strategy, and we will see how we can capitalize on the current risk of sentiments. If we consider the trading context for the day, most of the data which we got for the euro area earlier in the day was on the softer side, and if we see the consumer confidence number, it was worse than the prior reading, and now it has declined to minus 15.5. The economic sentiments have not changed much, and it stands at 90.9, whereas the industrial sentiments are still in negative territory at minus 9.6, and the service sentiments are also lower, even lower than the prior reading. The consumer inflation expectations have slightly risen, and this is not having much of an impact. Later in the day, we got the GDP numbers and initial jobless claims for the United States. And here, the GDP numbers for the third quarter of this year are quite good, and this is mainly because of the low base effect. And we are seeing the recovery after sharp decline which we had experienced in the second quarter of this year. So in terms of quarter on quarter, the GDP growth stands at 7.4%, and if we annualize it, then it is showing the rise of 33.1%, but we didn't really see much of an impact in the currency as well as in the equity segment of these numbers, and the broader sentiments have kind of overshadowed these positive releases coming in. The initial jobless claims are also lower than the prior numbers and also lower than the expectation. But as I said, we didn't really experience much of an positive uptick in the relevant instruments. Moving on to the ECB's monetary policy announcement, as expected, the ECB has left the interest rates unchanged, and the interest rates now stand at 0%, whereas the deposit facility rate has been left unchanged at minus 0.5, and the marginal lending rate stands as it was at 0.25%. And if you look at the commentary of the President Lagarde, you can make out that the ECB is concerned given the economic data's downturn, and ECB is mulling its option, and I think in the coming meeting, maybe by December, we will see some more policy measures being taken by the ECB to shore up the confidence. But as the president also said, a lot depend on the virus trajectory, and if we see the current resurgence continuing, and in that scenario, most of the businesses are likely to be adversely affected, and that will leave the economy in a very difficult spot, and of course the ECB will have to act, and because of that the expectations for next meeting are now going to go up. So let's see how things will unfold in the meantime. Now moving on to the technical outlook. First we will see what's happening in the S&P 500, and then we will move on to the dollar index. Let's start with the S&P 500's technical outlook. This is the daily time frame chart, and yesterday's decline of more than 3 percentage point has kind of completed this formation of double top around 3600. Just below that, I think this second high has been made closer to 3550, but we are not really being precise here, but more or less this formation now increasingly looks like the double top formation, and that opens up the possibility of the S&P 500 moving below this immediate swing low, and moving past this support zone towards this 3000 area, which is its next major support. And given the rising cases, the second wave of this outbreak is also going to impact the market outlook in the near term. And as a result of that, I think it will be better for us to adapt to these changing circumstances and adapt our strategies accordingly. And given the fact that bearish sentiments are there in the market, it will be better for us to look for the short selling opportunities. In today's session, it's pretty difficult to go for the fresh trades given the backdrop of large decline in yesterday's session. So in today's session, for fresh trading positions, it will be pretty difficult to pinpoint any precise zone, but we will see some broader levels which we can target. And if we are fortunate enough, if we get the price action closer to that, we can indeed think about going in for the trade positions. Now looking at this regression curve and the pivot point series, we can confirm that these bearish sentiments are likely to prevail for next couple of sessions at the minimum. And given this magnitude of the decline, I am as I said, I am pretty much expecting this prior swing low to be broken in due course of time, and as a result of that, we might even see the S&P 500 declining even below the 3200. And eventually, from medium term perspective, even I am looking at the 3000 zone being touched again. But for us, it's important to look for the shorter term horizon, and we are more concerned with that. And as I said, given this sharp decline, it is going to be fairly difficult for us to figure out the optimum trade setup in today's session. So if we see this chart, the key region to act as the marking point for us is going to be around this 3400 zone, the central pivot point, which is at 3380. And since we are almost 3 percentage point away from that zone, I am not really expecting that marker to be of much use in today's session. So moving on to the lower time frame, we can be fairly hopeful of the S&P 500 more or less holding below these immediate swing lows, which were then broken in due course of time. And this 50 SMA zone should be our next target zone. And if we see some sort of retracement happening, and if the S&P 500 is able to inch back toward these 50 SMA, then I think we can think about going in for the fresh positions in today's session also. And if we are going to get that trade, I think we will have to keep the stop losses somewhere close to the 3400 zone. As I said, on the 4 hourly chart also, we saw that we have the resistance in the form of the central pivot point, and that is going to act as the near term resistance. So if we are going to go for any fresh trading opportunities, the stop loss is going to be far away around 3400 zone, and that is going to be a big concern, as we don't really want that wide stop loss. So we will have to be patient here and see how the price action evolves in today's session. Now moving on to the inflows which we are experiencing in the dollar index. Dollar is the king again, and these risk off sentiments are pushing the valuations of the USD higher against its most of the major peers. So looking at the chart for the dollar index, we can see that this consolidation phase, which helped the dollar index make a base around 92, is proving well. And now this time around also, we saw the dollar index reversing the course just little above this 92 support area, and for the day it is following up on yesterday's gain, and it is trying to even reach toward this immediate swing high zone, which is there around 94. We are not really far off from 94 now, and as the things stand, we can pretty much expect the near term swing high to be broken, and in due course of time we can even expect the dollar index to rise above 94. And if we see this broader picture, then this formation, the immediate swing low is higher than the prior swing low, so that also is going to be a factor. And from medium term perspective, you can even expect the dollar index to get past these immediate swing high, which is just below the 95, and try to get closer to this prior resistance zone, this 100% Fibonacci expansion range. And if that is going to happen, I think we will be in a better position if we keep looking for the buy trades in the dollar index. And for that, the helpful factor can be this central pivot point area around 93.5. In today's session, in the early hours of the day, we saw this consolidation happening just closer to this central pivot point, and then eventually we saw this break on the higher side. And now the price action has even moved past this upper band of this regression curve, which is still bent on the lower side, the downward side. But as I am seeing the price action, we can expect this regression curve to flatten in a session or two. So we have here the formation now, which is going to be more and more conducive for the buy trades in the dollar index. And for us, the near term support is going to come in the form of this central pivot point and the immediate consolidation phase zone, where we can consider this 93.4 to 93.5 the price region to be of much help for us while determining whether to go long or whether to simply sit on the sidelines. So here, coming to this lower time frame chart, we have confluence zone of 50, 100 and 200 SMAs around 93, and taken together, all these three key SMAs are going to be the near term support for the dollar index. And unless and until we see any clear cut break below that, I think we can be fairly confident of the continuation of the uptrend in the dollar index. And as I said, the near term support is going to be this immediate swing low, this consolidation phase low, where we saw the buying momentum coming back around 93.4 to 93.5. So I think even in the latter part of today's session, you can indeed target this price zone and try to get involved for the new trades anywhere close to this. But looking at the price action, we will have to be really fortunate for the price to reverse and get to this price zone, and we will also need the consolidation at least for a couple of hours before we can be sure of going in for the fresh trades. So it is a difficult trading session. As I said earlier also, we are not really in position to add the new positions straight away, and because of that we will have to be patient here and adapt the wait and watch approach. And if the price action turns favorable, if we get the optimum entry and exit points, if the risk reward ratio is in our favor, then at that point in time you can of course go in for the fresh trade on the long side. And as I said, this near term support zone can be utilized for our fresh trades in the dollar index, while keeping the stop losses just a little below this support zone. I think the stop loss anywhere below the 93 should be good enough for today's session. And if the dollar index doesn't really break below 93, then I think we are almost pretty much geared up for the break above 94, and eventually even 95 levels should be reached in next week or two. So that's it from my side for today's session. If any of you have any query or any idea to share, you can write it in the comment section, and I would be more than happy to take the discussion forward. Before I sign off, I would also like to remind of the risk associated with trading in the financial instrument, and one should be careful while using the information provided. Have a fabulous day ahead.